Welcome back to another deep dive. You might remember that YouTube video we did a while back on Oriental Kopi's IPO.
The one where we dug into their prospectus.
Yeah, exactly. We were really trying to figure out, you know, if this Malaysian cafe chain was actually going to be the next big thing, like they were claiming.
Right, all that talk about being the Starbucks of Southeast Asia.
Well, it's been a little while now. It's February 24th, 2025, and they just released their first quarterly report.
As a publicly listed company.
Exactly. So
Yeah.
this is our chance to see if they're actually living up to all that hype.
And the market's been watching them closely. They listed on the ACE market of Bursa Malaysia back on January 23rd.
Oh, yeah, I remember that.
And their share price, it just exploded on debut.
Really?
Yeah, it went from RM 0.44 to RM 0.88, like instantly doubled.
Wow. Talk about a caffeine rush.
And now it's hovering around RM 0.81.
So I guess the big question for us today is Oriental Kopi actually overvalued at that price? Based on what we're seeing in this Q1 report.
That's what we're here to find out.
Okay, so before we dive into the numbers, maybe we should do a quick recap for anyone who's just joining us for this deep dive.
Good idea. So basically, Oriental Kopi is a Malaysian cafe chain, and they've got these two main revenue streams, right? They're cafes, obviously.
That's their bread and butter.
Exactly. And then they've also got this packaged food business.
Oh, right. Like their own coffee and tea and stuff.
Yeah, that you can buy in stores.
Yep. It's like their attempt to be the Starbucks of your pantry.
Clever strategy. I mean, if they can pull it off. But let's get into the nitty-gritty here. The numbers from this Q1 report. What kind of revenue are we looking at?
Well, they pulled in a pretty hefty RM 97.83 million for the quarter.
Okay, so they're definitely brewing up some serious business.
No doubt about that.
Yeah.
But it's important to remember that revenue comes from those two different parts of their business models.
Right, the cafes versus the packaged foods.
And it turns out cafe operations are still their main engine.
Like, how much are we talking?
A whopping 80.80% of that total revenue comes from their cafes. Wow. So the packaged foods are still a relatively small part of the picture.
For now, at least. But that split is really important to keep in mind as we go through the rest of their financials.
Okay, so they're bringing in a lot of revenue. But are they actually making any money? Are they profitable?
Well, they reported a gross profit margin of 25.88%, a profit before tax margin of 17.68%, and a profit after tax margin of 13.38%.
Those are okay numbers, I guess, but
Just like that, right?
come on, spill the beans.
Well, if we compare these figures to some of their competitors, other listed companies in the Malaysian F&B space,
Okay.
that net profit margin of around 15%, it's not that impressive, to be honest.
Really?
Yeah, it kind of raises some questions about their operational efficiency, Are they managing their costs as tightly as they could be? Or are there some inefficiencies we need to dig into?
That's a good point. I did notice that they had some listing expenses in this report that probably impacted their figures.
Yeah, those listing expenses can definitely skew things.
So what do their profit numbers look like if we exclude those costs?
Well, their adjusted profit before tax comes in at RM 17.70 million, which is an 18.9% margin. And the adjusted profit after tax is RM 13.50 million, or a 13.80% margin.
Okay, so that paints a bit of a rosier picture.
It does make those margins a bit more palatable. But hold on, we're not done yet.
What else is there?
Well, remember, back on November 27, 2024, they declared a pretty hefty dividend payout.
How hefty are we talking?
RM 21.00 million.
Whoa, okay. That's something we'll definitely need to consider when we look at their cash flow situation a little later.
Absolutely. Dividends can be great for investors, but they also impact the company's ability to, reinvest and grow.
Right. So speaking of growth, their revenue TAGR from 2021 to 2024 is over 280%.
Yeah, it's pretty incredible.
So is this kind of growth sustainable? I mean, is this the new normal for Oriental Kopi?
Well, that's the million ringgit question, isn't it?
Yeah, I guess so.
We can't just get swept up in the hype. We need to figure out what's actually driving this growth, Is it organic, meaning their existing stores are doing really well?
And attracting more customers. Or are they just opening a bunch of new locations?
Exactly. More cafes will obviously lead to more revenue, but doesn't necessarily mean the business model itself is strong.
Okay, so how do we dig deeper into that? How do we figure out what's really going on?
Well, that's where things get a little frustrating. The report doesn't give us any detailed store-level revenue data.
Really?
Yeah, it's kind of a black box, which makes you wonder about the true health of their existing cafes and the real drivers behind this remarkable growth.
So some potential red flags there in terms of transparency.
For sure. But let's zoom out a bit and look at the bigger picture. What's the overall market outlook like for the Malaysian F&B scene? Are they facing any headwinds?
Yeah, Is the market even growing?
Well, from what I've seen, the Malaysian F&B market is actually on an upward trajectory.
Okay. That's good news for Oriental Kopi.
It is. It's being driven by things like rising consumer spending and the rebound in tourism after, you know, all the craziness of the past few years.
So more people eating out, more potential customers for Oriental Kopi.
Exactly, but
There's always a but.
well, inflation and rising food costs are a real challenge for the entire industry right now.
Oh, yeah, for sure.
And this is especially true for a company like Oriental Kopi that relies so heavily on third-party suppliers for all their key ingredients.
Right. If they can't negotiate good prices from their suppliers, or if they can't pass those higher costs on to consumers, their margins could take a hit.
Absolutely. It's a delicate balancing act.
And of course, we can't forget about competition.
Oh, yeah. Competition is fierce in this market.
They're going up against giants like Starbucks and Old Town White Coffee.
Right.
Not to mention all those independent cafes.
It's a crowded landscape.
Yeah.
So the question is, can Oriental Kopi really carve out a niche for themselves and thrive in this kind of environment?
So what's their strategy? How are they trying to stand out?
Well, it seems like they're trying to walk this fine line.
Between what?
Between the familiar and the new, you know? They're tapping into the heritage of Malaysian coffee culture, offering those classic flavors that resonate with locals, but at the same time, they're trying to present it all in a more modern, almost trendy kind of way.
So they're trying to be the cool kid on the block, but still respect their elders.
Something like that. I think it's a smart move to try and target both traditionalists and those consumers who are seeking a more contemporary cafe vibe.
Right, appeal to a wider audience.
Exactly.
Yeah.
But the question is, how sustainable is that strategy in the long run? And can they really differentiate themselves enough to pull customers away from those established players?
Yeah, that's a good point. And let's not forget about their expansion plans.
Oh, right. Those ambitious plans.
They're pushing for more cafes in Malaysia, which is already a very competitive market.
Extremely competitive.
And they're even venturing into Singapore now, right through that joint venture with the Paradise Group.
That's right.
Yeah.
So domestic expansion in a market that's already saturated, it requires really strategic location choices and incredible brand consistency and operational excellence.
Yeah. You can't afford to mess up.
And then expanding into Singapore, well, that's a whole other ballgame.
Different market, different tastes.
Exactly. It's potentially lucrative, but also risky if they don't adapt well to those local preferences.
So it sounds like we've got this really interesting mix of potential and risk swirling around Oriental Kopi. Right now,
Absolutely.
their revenue is impressive, but we're not sure how sustainable that growth really is.
Yeah.
Profitability is decent, but not outstanding.
And their expansion plans, while ambitious, they're definitely facing a lot of challenges.
Which brings us back to our original question. Is Oriental Kopi overvalued at RM 0.81 per share?
To really answer that, we need to dive deeper into their valuation metrics.
Okay, so let's do it. Stay tuned for part 2, where we unpack those price-to-book ratios, analyst targets, and try to separate the hype from the fundamentals.
Yeah.
Okay, so we've covered a lot of ground, but let's try to zero in on that valuation question. You mentioned price-to-book ratios earlier. Can you break that down for me? I'm not exactly a financial whiz.
Sure. The price-to-book ratio, or PB ratio, it's basically a way to compare a company's market value to its book value.
Okay, but what does that actually mean?
Well, market value is pretty straightforward. It's just the company's share price multiplied by the number of shares out there.
Right, so that's what the company's worth on the stock market.
Exactly. And then book value, it's kind of like a more fundamental measure of what the company's actually worth.
How so?
Well, think of it as what the company's assets are actually worth.
Like their buildings and equipment and
Exactly, minus any debts they have.
So it's like looking at their net worth in a way.
Yeah, kind of. So the PB ratio, it's essentially comparing what investors are willing to pay for the company.
To what the company's assets are actually worth.
Exactly. It's like checking if the sticker price on a used car is actually a good deal based on its real condition and how many miles are on it.
Okay, I like that analogy.
Yeah.
So what does Oriental Kopi's PB ratio look like?
Well, it's a bit higher than some of the other companies on the ACE market, companies that are similar in size and industry.
So what does that tell us?
Well, a high PB ratio, it often means investors are pretty optimistic about the company's future growth potential.
So they're willing to pay a premium for those shares.
Exactly. But the question is that optimism actually justified based on what we've seen so far?
Right, because we have spotted some potential red flags.
We have, and that's what makes this whole valuation thing so tricky.
So what else do we need to consider besides the PB ratio?
Well, remember, their IPO, it involved a very limited public offering.
Oh, yeah. Just 3% of the shares were made available to Malaysian investors.
Right, that's right. And that limited supply, coupled with high demand, it likely drove up the price.
Creating what's called a new listing premium.
Exactly. It's basic economics, you know? When something's scarce, people are willing to pay more for it.
Like that special coffee blend we talked about before. The one with the rare beans.
Exactly.
That.
So that new listing premium, it could be inflating Oriental Kopi's valuation, at least in the short term.
Okay. So we need to be careful not to get too caught up in the hype.
Right. The key is to separate the hype from the fundamentals, the actual performance of the business.
Got it. So besides the PB ratio and this new listing premium, what other clues can help us figure out if Oriental Kopi's valuation is reasonable?
Well, analysts have set a target price of RM 0.81 for Oriental Kopi over the next 12 months.
Oh, really? So they're basically saying the current price is about right.
Yeah, more or less. But it's important to remember that analyst targets are just predictions.
And they can be wrong.
Oh, absolutely. They're based on a lot of assumptions about the company's future performance, overall market conditions, all sorts of things.
So we shouldn't take those targets as gospel.
Definitely not. It's just another piece of the puzzle.
Okay, so I'm getting the sense that there's no easy answer to this valuation question.
You're right. It's complicated. There's no magic formula or anything.
So how do we make sense of it all?
Well, what we've tried to do in this deep dive is equip you with the information and tools you need to make an informed judgment.
Okay.
We've analyzed their financials, explored their growth potential, highlighted some potential risks, considered the overall market landscape.
So it really comes down to each investor's own assessment of the company.
Exactly. You have to weigh the potential rewards against the risks.
And decide if this is a company you want to invest in.
Precisely. It's all about your own individual risk tolerance and investment goals.
Okay. So no definitive answer on whether Oriental Kopi is overvalued. It's a judgment call.
That's right. But now that we've covered the valuation stuff, maybe we should shift gears and talk a little bit more about those risks we touched on earlier.
Yeah, let's unpack those a bit more and see how they could potentially impact Oriental Kopi's future.
Sounds good. Let's dive in.
Okay, so we're back, and it's time to tackle the elephant in the room, the risks.
Yeah. Every business has risks, of course.
True. But some are definitely scarier than others.
Right. And what I find interesting about Oriental Kopi is that their risks are kind of all over the place.
Like, what do you mean?
Well, some of them are just inherent to the F&B industry itself.
Like what?
Well, think about it. They're dealing with food and beverages. So things like food safety and quality control, those are always going to be top of mind.
Right. And then there are things like changing consumer tastes and preferences.
Exactly. Those are risks that every restaurant or cafe has to deal with.
Okay. So those are the industry-wide risks.
Yeah.
But what about the risks that are more specific to Oriental Kopi?
Well, their business model and their ambitious expansion plans, those definitely create some unique challenges.
Okay. So let's break those down a bit. Let's start with their reliance on third-party suppliers.
Right. They're getting their coffee beans and tea leaves and packaging materials and a bunch of other key ingredients from outside sources.
And what's the risk there?
Well, supply chain disruptions are a huge concern these days.
Yeah, for sure.
And they can happen for all sorts of reasons.
Like what?
Well, we've seen it all, right? Unexpected weather events, political instability, trade wars, you name it.
And any disruption in that supply chain could really mess things up for Oriental Kopi, right?
Absolutely. It could impact their production, drive up their costs, even damage their reputation if they can't fulfill orders.
So it's not just about getting good coffee beans. It's about getting them consistently and at a price that makes sense.
Exactly. It's all connected.
Okay, makes sense.
Yeah.
So what about competition? That feels like a pretty big risk for Oriental Kopi.
It is. The Malaysian cafe market is incredibly crowded.
I mean, Starbucks is already there.
Right. And Old Town White Coffee is a big player, too.
And then you've got all those independent cafes.
It's a real battle for market share.
So how can Oriental Kopi possibly succeed in this kind of environment?
Well, their strategy seems to be all about blending familiar Malaysian flavors.
With a more modern cafe experience.
Right. It's an interesting approach, but it comes with its own set of challenges.
Like what?
Well, maintaining that balance between tradition and modernity.
Yeah.
And ensuring that their brand stays consistent as they grow.
And that they're actually offering something unique.
Yeah.
You know, something that sets them apart from the competition.
Exactly. All of those things are crucial for their success.
Especially with their aggressive expansion plans.
Right. More cafes in an already saturated market.
It could lead to even fiercer competition.
And they might even end up cannibalizing their own customer base.
Ouch. Yeah.
That's not good.
And then there's a move into Singapore.
Oh, right. through that joint venture.
That's a whole other ballgame.
Different market, different tastes.
Exactly. They're going to have to really understand those local preferences, maybe adapt their menu, make sure their operations are top-notch.
It's like they're trying to win a coffee brewing championship in a different country.
Uh-huh.
I like that analogy.
You can't just use the same recipe.
Nope. You gotta know your audience.
All right. So we've talked about supply chain risks and competition.
Mm-hmm.
But what about those operational challenges that Oriental Kopi has faced in the past?
You mean like those health and safety incidents?
Yeah. And the temporary closures.
And that immigration raid?
Yeah. Those are some pretty big red flags.
They are. It makes you wonder about their operational practices and risk management.
For sure. I mean, those incidents could lead to reputational damage,
Negative press,
fines,
legal issues.
all of which could impact their bottom line.
It's a good reminder that running a successful business, it's not just about serving good coffee.
Right. It's about being a responsible and ethical company.
Exactly. Consumers are paying attention to these things now more than ever.
So transparency and accountability are essential.
Especially for a company that's trying to build trust with investors and customers.
For the long haul.
Exactly. Okay, so we've covered supply chain risks, intense competition, operational challenges. Anything else?
Oh, what about the fact that they're a newly listed company?
Right. That's another risk to consider.
They don't have a long track record.
So it's hard to predict their future performance.
And really assess their true value.
It's like trying to guess the flavor of a new coffee blend just by looking at the beans.
You got to taste it to be sure.
Exactly. And this lack of historical data, it can make their stock price more volatile.
Especially in the early days of trading.
When investors are still trying to figure them out.
Okay, so it seems like Oriental Kopi has a lot of potential.
They do.
But they're also facing some serious risks.
Absolutely.
Their success is really going to depend on how well they manage those challenges.
Adapt to changing market conditions.
And execute those ambitious expansion plans.
It's a lot to juggle.
It is. Well, I think we've done a pretty thorough job of analyzing Oriental Kopi.
I think so. We've covered their financials,
Their growth prospects,
their valuation,
and all those important risks.
Hopefully this deep dive has given our listeners a better understanding of the company.
And the factors that could impact their investment decisions.
Exactly. At the end of the day, the decision of whether or not to invest in Oriental Kopi,
It's up to each individual investor.
we've given you the information.
The insights.
But the final call is yours.
Do your own research.
Weigh the potential rewards against the risks.
And decide if this is a company you believe in.
And a coffee you want to sip on for the long haul.
Well said. Thanks for joining us for another deep dive.
It's been a pleasure.
And to all our listeners out there,
Stay informed
stay curious.
and keep diving deep.
Until next time.